Peter Eliades with you. This is Stock Market Cycles update for the week ending September 25th, 2020, being recorded on September 26th, 2020. This update, by the way, is going to be both for our regular paying website subscribers and as a YouTube update too. We try to do 3 to 4 YouTube updates. Obviously, those are the free updates every month to keep people acquainted with our projection techniques. And we encourage those of you that watch on YouTube to become subscribers to our website. Virtually daily updates. We've been doing them daily, although we don't promise them daily, but we certainly do an average of 4 to 5 of them a week. We encourage you to come and join, and if you have not had a free trial before, you can go to our website and get a 2-week free trial to these daily updates. That's at stockmarketcycles.com/register. And go to the daily updates. Don't go to the free part, because that just gives you free access to any information we might have on the website, but it's not for the videos or obviously for the software either. So go to stockmarketcycles.com/register and go under the videos and click on the 14-day free trial if you have not had a trial before. Okay. Yesterday on our regular subscriber update, I shouldn't say yesterday, it was the Thursday update that we did, we showed our subscribers via projections that there was a 90% chance we would get projections to between approximately 2,800 to 2,900. Those aren't the exact numbers we gave them, but those are the approximations of the numbers. So over a 90% chance, about a 92% chance, based on the projections, that we would get a projection to between 2,800 and 2,900 on the S&P. Mind you, that's not a 90% possibility that we get down to those numbers. It's a 92% probability that we will generate a projection down to those numbers. There is a difference between those two. And that 92% probability was based on 20 years of statistics. We try to tell people now that we have our statistics module in the projection software, which works fabulously well, and we try to give people an understanding of over what period of time those statistics have been generated. Obviously, if it's only for a 6-month or a 1-year period, it's not as statistically significant as if the percentage of successful projections being reached is over a 10, 15, or 20-year period. So the statistic we just quoted you, that there is approximately a 92% chance that we get projections to between 2,800 and 2,900, that's statistics gleaned over a 20-year period. Okay, let's get into some of the particulars here. The offset that you're looking at now is a 24.2 to 27.6 offset, the equivalent of a 5-week offset for a nominal 10-week projection. And these are the projection numbers: 3086.54 to 3179.17 rounded off. You can see where we closed on Friday. Had a nice rally on Friday. S&P was up 52 points. You can see on the crawler up above here, 51.87 points. So did that mean anything? Did that change anything? Well, let's have some fun again. Let's look at the very shortest term projections and see what, if anything, that meant, that big rally that we had. So we want to go to, on a daily chart, the shortest projections are generated with a 1.75 to 2 trading day offset. Here it is. Let's zoom in on it. As you can see, a projection was generated and met. Projection called for, now these are closing price projections. It called for a close between 32.95.46 and 33.11.09, and we closed at 32.98.46. right in the projection window. Okay, so let's go to the next longer offset, which is 3.5 to 4. And this one is interesting. You can see that there's a higher projection given, but I want to show you a close-up of how that higher projection was given, and you'll see that it's certainly not a high confidence confirmed projection. Let's go to the web chart. Here's the web chart. Look at this. This is kind of exciting. Here's the recent low. Again, these are closing price projections. We had a one-day rally, and then we had a rally on Friday. Now, as you can see, the chart shows that this projection has been confirmed. But you know how much it was confirmed by? Look at this. You need to get above the continuum in order to confirm it. Let's take a look at where the continuum, the upper part of the continuum, was on Friday. And the software shows us, read where it says 925.20 continuum. The high point in the continuum was 3298.32. Where did we close on Friday? 3298.46. By 0.14 points, we closed above it. Now, most of you have heard me talk about nicks and how the software can filter out the nicks. Is this going to turn out to be a nick? Well, we don't know yet. We won't know until, well, we should know by Monday of next week by the close. But right now, it looks like this might be a nick because we're right in the projection window over the 1.75 to 2 offset. And in terms of the 3.5 to 4, you just, by the barest of margins, got above the continuum. And you can see when I say barest of margins exactly what the numbers are. I just gave those numbers to you. So if we turn down immediately again on Monday, then this projection will immediately be invalidated. This is a suspect projection for me right now, the fact that it has been confirmed by this tiny a margin. So obviously, if we get a close above the continuum on Monday, and the upper part of the continuum will be 33.1557, then this projection will be very much in effect. Okay, I wanted to show those two things to you. Now, what we just looked at means that there's a decent chance that the rally we saw on Friday is a one-day rally. We know that we have confirmed lower projections. Let's take a look at the Dow and see if anything similar is happening there. Okay, here's the DJIA, same 1.75 to 2 trading day offset, and look what happened. Almost exactly the same thing. We got a confirmed projection, 27,144.87, 27,251.39. We closed at 27,173.96, right here and inside the projection window. So that's why I say there's a decent chance that this was a one-day rally. We certainly, on the much longer offsets like 7, 8, and 12.1 to 13.8, they have lower projections outstanding. So let's take a look at the 3.5 to 4 for the Dow. Notice on the Dow, and it's another reason to throw at least a piece of doubt on the fact that the S&P gave that very, very marginal confirmed upside projection for 3.5 to 4. Let's look at the web chart for the Dow. Okay, here's the web chart for the Dow Jones Industrial Average closing price projections 3.5 to 4 offset. Look at this. We had that one-day rally Thursday, and then Friday had a big rally. On Friday, the DJIA was up 358 points and change. But look at this. It gave a preliminary projection all the way up to 27,532 and change, but it was not confirmed. That's important. Now again, on Monday, if we close above the upper part of the continuum on Monday, which will be at 27,288.18, okay, if we close above there on Monday, and that's, about another 110 points up, we will have a confirmed projection up to at least this level of 27,532. But the important thing is that the evidence that we're looking at now intimates that that could have been a one-day rally on Friday, because it met upside projections perfectly for the shortest offset on the daily charts and just barely appeared to give higher projections on the S&P, confirmed, but not on the Dow. So we'll be watching very closely on Monday. I think there's a decent chance that we turn down immediately from there and go to the significantly lower projections that we have outstanding. That's basically where we stand. For those of you that may have forgotten, or for those of you who are YouTube watchers, let's give you these closing price projections. Okay, on the S&P, we have a downside closing price projection for the 12.1 to 13.8 trading day offset, the equivalent of a 2.5-week offset for a nominal 5-week projection that calls for closing prices to between 3168.86 and 3198.72. Now you may say, well, wait a minute, it looks like we're getting close to invalidating that. Well, let's take a look at the web chart. It shows a clearer picture. As you can see on the web chart, because there are little tails on this chart, we see little tails, that are hanging around. You don't see that on the web chart. So the web chart is the one we want to look at for clarity. So as you see, this projection remains very much in effect, 3168.86 to 3198.72 on a closing basis, okay? And in order to invalidate that, at least over the next few days, you're going to have to get above this almost a 3,400 level on the S&P. So getting up there, you're talking about over 100-point move on a closing basis. So this projection remains very much in effect. Okay, next offset, 24.2 to 27.6. This projection remains very much in effect, 30.86.54 to 31.79.17. In order to invalidate that, you need to get way, way up here, and you almost have to go back to the old highs over the next week or two, okay? So that doesn't appear to be in the cards. So these downside projections are very much in effect. How reliable are these downside projections? Well, this particular one, again, 24.2 to 27.6, what we did was we went out 6 years for data. In other words, over the past 6 years, let's look at the statistics for these downside projections, okay? Show statistics. Downside projections generated over the past, here's the data, the time span. October of 14 to September, almost October of 20, a 6-year time span, 22 projections to the downside. This is not all projections. This is downside. Were generated. 81.8% of those projections were met, okay? So now you know what the projection is and what the statistics are that it will be reached based on the last 6 years of projections. So come on, there's a beauty to this software. There's a beauty to this technique. We want you all to appreciate it and to benefit from it. So we're going to leave you with that. No, we're going to show you one more thing. Here's what we're going to show you. And this is just very quickly, because how close we are to those projections that will give a projection down to around the 2,900 level on the S&P. This is a 189 to 194 trading day offset, the equivalent of a 39 to 40 week offset, and it gives you nominal 78 to 80 week projections. This is what we talked about at the top of this update. The odds now, based on some of the statistical work we did earlier in the week and we gave to our subscribers, was that this line would be penetrated. These two lines would be penetrated. And if they were penetrated, that would result in those projections down to 2,900. So you ask, well, how reliable are these projections? Well, it depends on what time span you use. Right now we have 6 years programmed in here. And if we go to show statistics for the past 6 years, 87.5% of the projections. Not a huge statistical base, only 8 projections given. But of those 8 that were given in the last 6 years, 7 of them were reached. Okay? So that's what we're looking at. The word magic keeps slipping out of my mouth, and you should never use that in relationship to anything regarding the stock market. There is no magic. But if there were magic in the stock market, this would be it. Anyway, thanks a lot for watching. We hope you YouTube users or viewers have been encouraged to go and, if not subscribe immediately, at least go and register if you haven't not had it before for the free trial. This is the kind of information that we give our subscribers. Thanks for watching.